To understand blockchain technology, we first need to understand the old-fashioned way of accounting and tracking money's cash flow, among other things. Let's dive in. A general ledger is a fundamental accounting record containing a business's financial accounts. It provides a complete record of all financial transactions organized by account categories and is the backbone of a company's financial reporting system. In a general ledger, accounts are typically grouped into 5 main categories. 1. Assets. 2. Liabilities. 3. Equity. 4. Revenue. And 5. Expenses. Let me illustrate this with examples from a hypothetical tech startup called AI Tech Corporation 1. Assets, cash. $50,000, initial funding. Equipment. $15,000, computers and office equipment. Accounts. Receivable, $5,000, money owed by clients. 2. Liabilities. Accounts payable, $3,000, money owed to suppliers. Loans payable, $20,000, small business loan. 3. Equity owner's investment, $40,000, founder's initial investment. Retained earnings, $7,000, profits kept in the business. 4. Revenue, service revenue, $30,000, income from software development projects. Consulting revenue, $10,000, income from tech consulting services. 5. Expenses, salaries, $25,000, payments to employees. Rent, $3,000, office space rental. Utilities, $500, electricity, internet, etc. Marketing, $1,500, online advertising and promotional materials. Each account would have its ledger page or section in the general ledger, where all related transactions are recorded. For instance, every time AI Tech Corporation receives payment for its services, it is recorded in the cash account, increasing assets, and the appropriate revenue account. The general ledger allows AI Tech Corporation to track its financial position, prepare financial statements, monitor cash flow, ensure accuracy in bookkeeping, and facilitate audits and tax reporting. 1. What is the process of recording transactions in a general ledger? 2. How do startups typically set up their chart of accounts? 3. What is the relationship between the general ledger and financial statements? 4. What do startups face as common accounting challenges? 5. Software tools used for managing general ledgers in modern startups. Process of recording transactions in a general ledger. Transactions are typically recorded using the double-entry bookkeeping system. Each transaction affects at least 2 accounts. For example, when AI Tech Corporation receives $5,000 for a consulting project, debit cash, $5,000, asset increase, credit consulting revenue, $5,000, revenue increase. Modern accounting software often automates this process, but understanding the underlying principle is crucial. Setting up a chart of accounts for startups. A typical startup might structure their chart of accounts like this: 1,000 to 1,999. Assets, for example, 1,000 cash, 1,100 accounts receivable, 2,000 to 2,999. Liabilities, for example, 2,000 accounts payable, 2,100 loans payable, 3,000 to 3,999. Equity, for example, 3,000 owners' equity, 3,100 retained earnings, 4,000 to 4,999. Revenue, for example, 4,000 service revenue, 4,100 product sales, 5,000 to 5,999. Expenses, for example, 5,000 salaries, 5,100 rent, 5,200 marketing. Startups should keep it simple initially but allow room for growth and more detailed categorization as the business expands. Relationship between the general ledger and financial statements. The general ledger is the source for creating financial statements. The balance sheet uses ending balances of asset, liability, and equity accounts. The income statement is derived from revenue and expense accounts. The cash flow statement is based on changes in the cash account and related transactions. Accounting software can usually generate these statements automatically from the general ledger data. Common accounting challenges faced by startups include cash flow management, which is balancing incoming revenue with outgoing expenses. Then there's equity accounting, where you track investments, stock options, and valuation changes. Revenue recognition is another challenge, as it involves properly timing revenue recording, especially for subscription-based models. Expense categorization is crucial too, for correctly classifying expenses for tax and reporting purposes. And finally, scaling systems, which is transitioning from simple to more complex accounting as the company grows. Software tools for managing general ledgers in modern startups are quite essential. Popular options include QuickBooks Online, which is user-friendly and good for small to medium-sized businesses. Xero is another choice, being cloud-based with strong automation and bank reconciliation features. NetSuite is a comprehensive ERP system suitable for rapidly scaling startups. Wave offers a free option, which is good for very small businesses or freelancers. Lastly, Sage Intacct is strong in financial reporting and analysis. Now let's delve into some real-world examples of general ledger entries to bring all these concepts to life. Imagine a startup called Ecotech Innovations, which specializes in eco-friendly home solutions. Example 1. Revenue recognition. Ecotech Innovations receives a payment of $10,000 for a large solar panel installation project. They would record this in their general ledger as debit, accounts, receivable $10,000, credit, revenue $10,000. Example 2. Expense recording. Ecotech purchases raw materials worth $2,000 on credit. This transaction would be recorded as debit, raw materials inventory $2,000, credit, accounts payable $2,000. Example 3. Payroll. It's payday, and Ecotech needs to pay its employees a total of $5,000. The general ledger entries would be debit salaries, expense $5,000, credit, cash $5,000. Example 4. Loan repayment. Ecotech repays $3,000 of a business loan, including $200 in interest. The ledger entries would be debit, loan, payable $2,800, debit interest expense $200, credit cash $3,000. Example 5. Depreciation. Ecotech owns machinery worth $50,000, and the annual depreciation expense is $5,000. They would make the following adjusting entry: debit, depreciation expense $5,000, credit, accumulated depreciation $5,000. These examples illustrate how various transactions are recorded in a general ledger, ensuring that Ecotech Innovations maintains accurate and up-to-date financial records. Understanding these entries is crucial for generating reliable financial statements and making informed business decisions. Now let's move on to see how AI Tech Corporation implements these practices in their typical workflow. To tie this all together, let's consider a typical workflow for AI Tech Corporation. They set up their chart of accounts in QuickBooks Online. As transactions occur, like receiving payment for services, they enter the system, automatically updating the general ledger. At month end, they review and reconcile accounts, making any necessary adjusting entries. They then generate financial statements from the software, which pulls data directly from the general ledger. These reports help them decide about cash management, pricing, and growth strategies. As AI Tech Corporation grows, it might face challenges like properly accounting for a new round of funding or managing intercompany transactions if it expands internationally. It would need to adapt its accounting processes and potentially upgrade its software to handle these more complex scenarios. Let's delve deeper into each step of this workflow. Initially, setting up the chart of accounts in QuickBooks Online is crucial. This involves categorizing all financial transactions into different accounts. As transactions occur, they are entered into the system, updating the general ledger in real time. At the end of each month, the accounts are reviewed and reconciled. Any necessary adjusting entries are made to ensure accuracy. Financial statements are then generated from the software. These statements pull data directly from the general ledger. The reports are used to make informed decisions about cash management, pricing, and growth strategies. As AI Tech Corporation grows, it may face challenges like accounting for new funding rounds. Managing intercompany transactions becomes crucial if the company expands internationally. Adapting accounting processes is essential to handle these complexities. Upgrading software may be necessary to manage more complex scenarios. This workflow ensures that AI Tech Corporation maintains accurate and up-to-date financial records. By leveraging QuickBooks Online, they streamline their accounting processes. This allows them to focus on strategic growth and operational efficiency. Real-time updates to the general ledger provide a clear financial picture. Regular reviews and reconciliations ensure the accuracy of financial data. Adjusting entries are made as needed to correct any discrepancies. Financial statements are generated to provide insights into the company's financial health. These reports are crucial for making informed business decisions. They help in planning for future growth and managing resources effectively. Proper accounting for new funding rounds is essential for financial stability. Managing intercompany transactions is vital for international expansion. Adapting accounting processes ensures compliance and accuracy. Upgrading software helps in managing complex financial scenarios. AI Tech Corporation's workflow is designed to support its growth and success. By using QuickBooks Online, they maintain efficient and accurate accounting records. This enables them to focus on strategic initiatives and operational improvements. Real-time updates to the general ledger provide a comprehensive financial overview. Regular reviews and reconciliations ensure the integrity of financial data. Adjusting entries are made to correct any errors and ensure accuracy. Financial statements are generated to provide a clear picture of the company's financial status. These reports are essential for making strategic business decisions. They help in planning for future growth and managing resources effectively. Proper accounting for new funding rounds is crucial for financial stability. Managing intercompany transactions is vital for international expansion. Adapting accounting processes ensures compliance and accuracy. Upgrading software helps in managing complex financial scenarios. AI Tech Corporation's workflow is designed to support its growth and success. In this section, we will delve deeper into the intricacies of general ledger accounting. We will explore advanced concepts, common pitfalls, and best practices to ensure accurate and efficient financial record-keeping. Stay tuned as we uncover the essential elements that make up a robust general ledger system. One advanced concept is the use of subledgers to manage detailed transactions without cluttering the main general ledger. By maintaining subledgers for accounts like accounts receivable and accounts payable, companies can streamline their financial reporting and improve accuracy. Another key practice is implementing internal controls to prevent errors and fraud. This includes regular reconciliations, segregation of duties, and automated alerts for unusual transactions. These measures help maintain the integrity of financial data and ensure compliance with regulatory requirements. Common pitfalls to avoid include neglecting to update the chart of accounts as the business evolves, failing to document transactions properly, and overlooking the importance of backup and data security. Addressing these issues proactively can save time and resources in the long run. Best practices also involve continuous training for accounting staff to keep them updated on the latest accounting standards and software tools. Investing in professional development ensures that your team can handle the complexities of modern financial management. By mastering these advanced concepts and best practices, businesses can build a robust general ledger system that supports accurate financial reporting and informed decision-making. In the next section, we'll wrap up our discussion and provide a call to action for further learning. General ledger ensure to maintain balance in the accounting equation where assets is equal to liabilities plus equity. More videos about a business's accounting will soon be on this channel. If you liked the video, please subscribe and give it a thumbs up.